Well, hello everyone. Welcome to the Crypto Tax Audit. Ask me anything about crypto taxes, particularly the urgent issues here at the end of the year that everyone needs to address. I have with me our Director of Crypto Analytics, Ben Weber, and he'll be on the call. I want to say hi, Ben.
Hey everyone, thanks for having us.
So we're going to give just a brief overview of the critical issues that have to be addressed. And then we're going to open it up for basically an Ask Me Anything session. And a lot of you are already have gotten on the line. You're adding some comments. We have a couple people, Liam and Marty in the back end, are going to be looking at these comments and bringing the questions forward to us. So that'll be how we'll be doing questions. Get your questions in early. If there's a duplicate questions, we'll probably not answer them and skip on to another one. This recording will be made available shortly afterwards on our YouTube page, and we'll probably put a link up on Twitter so you can see it and listen to it again. A lot of great information. Well, let's just get right into it. I want to be as blunt as possible. Here it is today, December 17th, and there is a crisis in crypto tax reporting. And simply put, almost everybody is at risk of having incorrectly calculated their crypto gains in prior years and are at significant risk if audited. Now, let me break this down. The IRS has come out with regulations that have reversed prior guidance that they gave in 2019 on how crypto gains are to be calculated. They have reversed it. They've reversed it in this way. They've said that the challenge is how do you determine the cost basis of a coin that's sold? They've changed it in two ways. One is their mandatory use of the first in, first out method, and more importantly, the use of a by account method of tracking which coins are sold. That is to say, when you sell a coin, it has to be one that was in the same wallet. Up until now, the default in almost all the crypto gain calculation services is a universal wallet, where all coins, all wallets are treated as though there was one wallet to pick from. And this was allowed in the prior guidance that was located in the frequently asked questions that made available in 2019. But the IRS came out with regulations and they've made it very clear that this is not how they are going to be counting it. Now, the problem is they've changed their regulations. These new regulations will go into effect retroactively, okay? And we had one client who, when we switched their gain calculation from a traditional way that we were allowed under the old guidance to the new guidance, it resulted in a $1 million increase in taxable gains that he would have had to report for a prior year. So this is serious. The degree to which everyone's going to be impacted, it varies. But let me just tell you right now, if you're using the following gain calculation services, your prior calculations are all wrong. That would be Token Tax, Coin Ledger, Zen Ledger. So, but the good news is, if you use the other services, they too offered a by wallet approach as well, but the default was a universal approach. Almost everybody's gain calculations do not conform to how the IRS is going to examine you during an audit. The good news, though, is that they came out with a revenue procedure. This is a way to handle a tax situation that it's called Revenue Procedure 2024-28, and it allows you to, if you take some simple steps, which we're going to talk about, you can protect yourself from the past. Basically, you lock in the unused cost basis at the end of this year, map it against your existing inventory of coins, and that becomes a new baseline for you and the IRS for starting 2025. Okay, we're going to get into the details, but here's the big action item you need to take. You have to adopt a plan for how you're going to do this, and you have to formally adopt it with a timestamp before the end of this year. Okay, so you only got 14 days left to make this happen. We've made it easy for you. We're the experts in crypto gain calculation. You can go to our website, CryptoTaxAudit.com/1099. I'm sure it's going to be on the screen at some point. You go there and it's going to invite you to sign up for the Safe Harbor Allocation Plan. Just do it. The page explains everything about it. Don't worry, don't lose a lot of time on it. Just sign up for it. It creates an electronically signed document that you get a copy of, and we retain a copy for our records. Nothing goes to the IRS when you sign up for this. But if you don't have proof that you adopted this plan by the end of the year, you don't get to take advantage of this revenue procedure. All right, so that's massive, massive number one takeaway. While you're watching this AMA, just go to that website and sign up. You don't have to use it if you don't want to, but trust me, it's worse to not have one. Now, the second step in the process here is to do a physical inventory, and Ben's going to get into describing what that means. But I guess I want to take a little advertisement break at this point and talk to you about CryptoTaxAudit. We are I would characterize us as the largest crypto tax audit firm in the US. All we do are crypto tax returns. Not only do we calculate the gain using a full service method where Ben and his team actually calculate the gain for you, you don't have to do the work. And we also prepare the entire tax return, and we defend people in audits for the IRS. Nobody else has done the level of scale that we've done. When we've done over 4,000 crypto tax returns, none of them have been audited on their crypto results. And so that's an incredible record. It's way, 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 way below the national average. And the reason is we put extra things in there that you wished were in there. If you knew in advance, you're going to get audited by the IRS. And since most of our clients, crypto traders, are all reasonably high risk of being audited, this is what you want. It costs more than your regular return, but I think you'll feel comfortable having it. And then finally, we defend people in audits. We've done over 50 audits. 40% of the time, we get refunds back for our clients. But we've also defended audits all the way up to tax court. We've had 4 tax court cases, and we have won 3 of them. And the 4th one, we're waiting for the IRS to completely throw in the towel. We've challenged their gain calculation 4 times, and they're still trying to come and beat us, and we've just whooped them every single time when we go up against the IRS. And nobody else has this record. We are the experts, and just because somebody can do your gain calculation doesn't mean they're going to defend it when it comes time with the audit. And the IRS is ramping up their auditors. Right now they have about 8,000 auditors. They have plans in place with Congress for budget increases to give them another 29,000 auditors within the next 4 years. A lot of people are saying, what's going to happen with Donald Trump and taxes? Well, my simple answer to this is Donald Trump is really big about paying down the deficit. The IRS is the money-making arm of the U.S. government, and tariffs do not bring in enough money to cover how much is being brought in. And so I have every expectation that Donald Trump will continue to increase the number of auditors as the IRS has planned. Even though they let go of some management, they'll probably still bring in the auditors. And there's chatter out there about no taxes for cryptocurrency and this sort of thing. Until Congress passes that law, then your taxes will be expected to be paid. And just recently, the IRS did a criminal investigation group has sentenced someone to prison for failing to report all their crypto income. That was the only thing that the person did. He failed to report $4 million of income in 2017, 18, and 19, and they just sentenced him to a year in prison and $1 million in restitution, plus paying back tax. Now is to talk to Ben about how you do an inventory of your coins at the end of the year.
Yeah, absolutely. So the 2 things that need to be done before the end of the year, even if you don't, quite understand what this safe harbor transition is agreeing to the global allocation plan or a reasonable one. We have one on our website that you can sign, and then taking the inventory snapshot on December 31st, 2024. Now, what is the inventory snapshot? This is a snapshot of all of your holdings by each wallet or account. And so this would show, like if we just look at centralized exchanges, like Coinbase, you go to your Coinbase account, go to the portfolio view, and then you would take a snapshot of that portfolio view. So it would show all your digital assets or cryptocurrencies and the amounts. So you have, 0.5 Bitcoin, 2 Ethereum, 100 Render, and that's what that would show. And then you're going to do that for all of your wallets as well. So the wallets, you can either log directly into your wallet to look at their portfolio view, or you can go to the Blockchain Explorer and look at the Blockchain Explorer. Now we have some instructions on our website on how to take this snapshot. And we think, by actually taking a screenshot of your portfolio balances by wallet and account is a best practice. If you use paper to write down your portfolio balances, there's risk of making a mistake, or if your handwriting is bad like mine, you might not know the difference between some of the numbers. If you put it in Excel manually, document your balances, again, there's room for human error. And so taking the snapshot is probably the quickest, easiest, and most secure way of doing it to ensure that the amounts there are accurate. And we recommend doing this on December 31st, 2024, so that the balances are accurate for when we have to do the allocation. If you do this, before December 31st, 2024, and you make transactions, transfers, buys, sells, anything, that's going to throw off your balances in the accounts. So you want to make sure that it's taken on December 31st, 2024 to have the most accurate, up-to-date balances. With another pro tips here, a lot of people like to do staking, participate in liquidity pools, or lend their tokens to third parties. For all of these instances, you want to make sure you capture the balances in those third party validators or delegators, people who are borrowing your tokens, so that when we do the allocation, we know that those are your tokens and how much and we can do the allocation correctly. So I'm talking about this allocation. So what this does is it allows you to transition from the prior year methods that you're using before the year 2025 and transition to the new IRS regulations. And the safe harbor is protecting you from using a non-prescribed IRS method in the past to transitioning to their the new methods and regulations that they have. So that's really what this safe harbor is about. If you find it confusing, that's because it is. But the two simple things are going back to agreeing to a global allocation plan, and then also doing that inventory snapshot. So those are the two important things. If that's all you do between now and the end of the year, you're in compliance, and we can figure out the rest in 2025. So I think, Clinton, with that, should we get on to some of these questions? Or do you have
Let's
anything
do
else
that.
to add there?
I apologize, everyone. We fixed any microphone problems now, I hope. Let in the chat, let us know if there's any issues still. First question comes to us from Jesse Aubrey. The questions are down below on the screen. When taking a screenshot of my wallet address is partially hidden in the middle with ... Is this acceptable as long as the beginning and end address is viable? Yeah, I think so.
I have most tokens on Decent Wallet and some on Examen. Should I merge or consolidate all onto one Decent? I don't think this is necessary. It might make this allocation easier. It might make your record keeping easier, but if that's the only reason you're doing it, it's not necessary. You can keep those separate, and you just take snapshots of both wallets.
Do both my wife and I need to do this? Typically, it's all piled together. This is a good question. I mean, it probably depends on whether have you always been married when you've been investing? If you've been treating it all as one joint pool, then I would continue to do that. But the bottom line in terms of the inventory is document every wallet and what coins you have in it with a timestamp. And if it's your wife's wallet, write wife's wallet on the side, your wallet, whatever it takes, so that if we come back 2 or 3 years from now and we look at those documents, it would be very clear to us what we're looking at in terms of what wallet it was. This is your wife's coins, your coins, whatever. So that's probably the best frame of reference on all these questions, is what will make sense to me a couple of years from now when I'm having to look at this possibly during an audit. Next question.
Is a screenshot of my Casa app with the Bitcoin total on an iPhone using the phone's pictures and timestamp good enough? I would say yes. If it has a timestamp, it has the date, it has the total. That would meet the requirements, and that would be easy for us to know how much was in the wallet. You might want to somehow get a way to identify what wallet that is. An easy way to identify in the future. If you could get part of the wallet address in there, if you can, in when you save the name of the document, you save the name as the wallet, so you know which one it is. It has to be easily identifiable, just like Clinton said, so that if we look at this a few years later, we can say, oh, that belongs to this wallet address ending in XYZ. I don't want to consolidate 1,000 addresses nor dox myself on Block Explorer for safety. Yes, I don't think if you're doing things to that seem complicated just to get the snapshot, don't do it. Take the snapshot. You don't need to make this more complicated than it is by moving tokens around and risking losing your assets.
Now that Gensler is probably leaving the SEC, does this change the safe harbor prevalence? No one else is talking about it. Well, a couple great questions. First of all, Gensler was with the SEC, and these are IRS regulations. So there are two different agencies, totally different set of administrative law. So Gensler is totally irrelevant to this. The fact that there's going to be a new IRS commissioner is totally irrelevant to this, unless they actively make steps. But this is all going to get done before Trump gets into power. So the relevant second thing would be, why is nobody else talking about it? This is absolutely a giant red flag for you in terms of the companies you're dealing with. We've been talking about it since the new regulations came out. Actually, in August, we started talking about it. September, they became formalized. We've already been in discussions with several of the crypto gain calculation services to educate them on the issues. Particularly cointracking.info has been working very closely with us. We've actually been quite shocked at some of the crypto CPAs and tax preparation firms are just now waking up to this crisis. Now, the question is not such as like CoinTracker, for example, they just came out and said some things about it. Well, hey, first of all, this is December. You finally got around to realizing this. But secondly, just because their software, CoinTracker software, does support buy wallet as well as the universal wallet approach. And so they have the technological capability to support it. So does CoinTracking, so does CryptoTax Calculator and Coinly. But the issue is not that can the software shift over to doing that, but you need to create a benchmark of where you're at using the revenue procedure, which means you got to have a formally adopted Safe Harbor Allocation Plan, and secondly, the inventory that Ben is talking about. So these are absolutely essential. You absolutely need to do this. I can't stress this enough. There's only 14 days left. After this year is over, you will not be able to go back and reconstruct a Safe Harbor Allocation Plan, and you're going to be exposed on all your prior gain calculations. They'll all be retroactively. When the IRS uses them, they'll use the retroactive rules. So your risk is significant for back taxes and penalties. Next question.
Hello, thank you for providing this Q&A. Will a Coinly report suffice? I have different assets in a few exchanges wallets, but I've used Coinly for tax reports the last couple of years. I think the source of this question is for the snapshot. Will Coinly suffice? So the IRS hasn't come out, and given a lot of instructions on the snapshot itself. And so, what we're telling you is best practice. And what is going to hold up if you get audited, or what is going to hold up in a few years if you can't remember this off the top of your head. And so what I recommend is, no, a Coinly report will not suffice. I recommend going to your accounts, taking the snapshot on your exchanges, going to your wallets or to the blockchain explorers and taking the snapshot of the portfolio with the timestamp. I don't know, how Coinly works, or with how they pull in the balances. I don't know if they're trustworthy or not. I haven't tested it out, but you know what I do know is when you go into your account and look at your portfolio, you know that those balances are correct. When you look on the blockchain explorer, those balances are correct. So I would recommend using those uh, the best practice.
I have to underscore that the Coinly report, it's not just Coinly, but any crypto tax exchange report of assets is totally unacceptable for this purpose. And let me just give you some insight. Anyone who's done their own gain calculation has found that there's errors, and you have to fix those errors before your gain calculation is done using any of these tax calculation software products. Now, one of the biggest problems is when we have a sale of a coin, but there's no record of having any coins. This is sometimes called a zero cost basis problem, where the software says, well, I don't know if you have these coins, so I'm just going to say the cost is zero. Well, the flip side of that problem is of a missing buy record is a missing sell record. And this is not really a problem for calculating your gains, because if there's no record of a sale, you're not going to report it on your taxes. But the problem is the inventory of coins inside that Coinly thinks you have and all the other services will not match your physical inventory. They almost always get out of whack, and they are higher. So any of those services that would generate a listing of how many your coins are, that's unacceptable, because it's a flawed approach to determining what you want to have. You have to prove your inventory. You have to use the screenshots. Screenshot is the word that the IRS has used in the Internal Revenue procedures. So I just wanted to thank you very much for that question. Next
I'd
one.
like to add to that too is think of this inventory when a business, reconciles back to the bank account, right? They have all of these journal entries and they're trying to reconcile back to the bank account. And it's almost impossible to reconcile the bank account if you don't know what the bank account number, balance is. And that's what we're doing here. That's what this allocation is. And it's also just like a business doing an year-end inventory count to make sure that they have the X amount of supplies that matches the X amount on their books. Do I need a separate 1099 DA slash safe harbor plans if I have digital assets under an LLC and also as an individual? I would say if you have assets, under an LLC, I would sign another safe harbor plan to that's just specifically for that LLC, and then you have another one for your personal crypto holdings. There's really no downside to doing it. You're just covering all your bases. Can you have more basis than coins? Um,
Actually, I'll take that one. The answer is yes. Almost everybody does. It's because of errors in how the crypto tax calculation software operate. They don't track missing sale records. So as a result, you have more basis. One of the things that we're going to do with this whole process of the revenue procedure is, first of all, you have the rule, the Safe Harbor Allocation Plan, which you need to sign up for today. And then we're going to do the physical inventory. You can do that at the end of the month, December 31st. And then next year, once you've done your gain calculations for 2024, we then need to map your basis to the physical inventory that you have, that you're calculating this at the end of this month. Now, those numbers won't exactly match. So what we have to do is adjust off or reduce if there's excess basis that doesn't, then there are coins in your wallet. So that'll be another step towards what's involved in this revenue procedure.
what happens if you transfer assets between wallets after January 1st, 2025? Yeah, this is a great question. So this goes back to what Clinton was saying about the buy wallet or buy account method that the new IRS regulations are requiring taxpayers to use. It is a more specific way of accounting and tracking your cost basis. So, for the example, let's say I buy one Bitcoin on Coinbase for $10, and then I transfer that one Bitcoin to my ledger. I am in the books and records. I am tracking that one Bitcoin was transferred to my ledger, and that has a cost basis of $10 that was purchased, on January 1st, 2017. Let's just say. So you can see where this gets complicated. Now let's say I transfer half of that Bitcoin to a Binance account and the other half back to Coinbase. So I'm still tracking, the parts of that Bitcoin going to both of the new accounts, and I'm tracking the cost basis associated with that Bitcoin and the purchase date that was originally associated with it. So this is a more detailed way of tracking cost basis. It's going to be a little bit more complicated because if you don't have all of your records and you're missing deposits and withdrawals, it's going to make the calculation really hard and probably not fun. I know, like in the past, a lot of exchanges they only provided trading history, and that was acceptable in the past because we were using this universal method, so we didn't have to track all the deposits and withdrawals. And now that we have to, the when you get data from an exchange, you need to get more than just the trading history. You need all the deposits and the withdrawals. That's going to be really important in the future, getting all of your information. How do you properly account for staking rewards? Well, currently, right now, staking rewards are considered income when earned by the IRS. So there's a revenue ruling, I think, in August of 2023 that they came out with their position. So if I earned, one ETH token today while staking it, and that's worth $4,000, then I have to report $4,000 of income on my tax return. Okay, so we'll move on. Is it really necessary to take screenshots of wallets that are not private blockchains? For example, every Ethereum address I have, the balance as it is on December 31st will be publicly viewable to everyone. This is a great question. I recommend that you take a screenshot because this is, again, a best practice. You are going to take the screenshot and have the timestamp in there, and it'll be really easy to know, okay, what date was this taken and how many tokens were in each tokens were in the wallet. To go back and figure out the balance, if you have a lot of Ethereum addresses, is going to be challenging. So the screenshot is the easiest way to get your accountant the information they need to do the allocation. It's a bulletproof way. If you get audited, you have the information right in front of you. And if in a few years you need to revisit this, again, it's a very simple way to look back to make sure everything was done correctly. To figure out your balances, on a certain date, is just going to be very time consuming. It's definitely possible on the blockchain, but a best practice is do the screenshots, get all the balances, and you are good for being in compliance. CoinTracker is now saying generate a snapshot and allocation report of your holdings once you are ready. Log into CoinTracker and select generate my snapshot and allocation reports in the banner notification. This will be after 1/1/2025. Okay, so the IRS says take a snapshot as of December 31st, 2024. So that means before January 1st, 2025. I'm going back to the question about Coinly, and using their reports for this snapshot. Again, the best practice and the most surefire way to get through an audit, if you get audited, is just take the snapshots on December 31st, 2024. If you do that, you haven't done anything wrong, you've done it correctly, and you'll be ready to do the allocation and move forward correctly. That again is our recommendations. There's by using the snapshot in CoinTracker, if their balances are off to what your actual account in Coinbase is or your centralized exchanges, you're at risk of doing the allocation incorrectly and at risk of not complying with the Safe Harbor. Therefore, that could mean back taxes if you're audited. So the next one here. Would it help to sell all your crypto on December 31st and buy back on January 1st for a clean slate for IRS for cost basis made easy? If I think this is a non-issue. I don't think you need to do this. by trying to sell all your tokens on December 31st, you could be realizing huge gains that you didn't intend on tokens that you don't want to sell yet, and therefore you're paying tax early. So I don't think this is necessary to do. If you have tokens that you're never going to hold for the long term, or that you just want to get rid of, this might be a good time to clean up. But this is not necessary, and it might have negative impacts on your tax situation rather than positive. So take the screenshots. It's not. It's just the two steps: sign the global allocation form and take the screenshots. At this time, your allocation will be calculated and data for 2024 and before will be frozen, and your reports will be generated. You will receive a copy of these reports via email. This is a critical step as your reports show that you have identified your remaining digital units of assets and basis allocates your holdings applicable starting January 1st. These reports must be maintained as they are required to qualify the safe harbor. So the first step here, I just want to make some clarifications, is you follow the two steps that we're saying: sign the global allocation form, take the inventory snapshots. The next step is we're going to reconcile your tax year 2024 transactions. And once those are reconciled and the gains, you're going to create what the IRS calls a list of unused units of remaining cost basis. So this is what I call a closing position report. This would show all of your holdings, when they were purchased, the specific dates, and the specific cost basis for each holding, and for each unit. Now with this report, you allocate that to what your actual holdings are for the snapshot that you take on December 31st, 2024. And this is what allows you to transition to the new IRS regulations. Because right now, with the universal wallet approach that a lot of people use on these crypto tax softwares, is that universal approach, and all of the cost basis is just jumbled. These softwares have not tracked where they currently sit. And so that's what this allocation is doing. In what circumstances would one need to default to global allocation plan instead of the specific unit allocation? Great question. Let me clarify. So in the revenue procedure, there's two allocations methods that can be chosen. There's the global allocation plan. Now this is the one that we have on our website. It's sort of like a one size fits all. The requirements for this are to agree to a global allocation plan and take the inventory snapshot. Afterwards, you can do the allocation, and you have until you file your 2025 tax return, including extensions, in tax year 2026 to actually do the allocation. So once you do these two steps, you have time to perform the allocation. For the specific unit allocation, and let me add one more thing with that global allocation. This is when you agree to it, it's a set of reasonable, instructions on how to allocate the cost basis. So for our allocation plan, we've said the cost basis that was acquired first gets allocated first to unhosted wallets and then to hosted wallets. Now, with the specific unit allocation, there's it must be done before January 1st, 2025, or the first transaction that you have in 2025. So this plan, it has to be executed and done pretty much before the new year. So if you have 14 days and you're thinking about the specific unit allocation, you might not have time to do this. So that's why there's the global allocation. The specific unit allocation allows for you to specifically identify the units of cost basis and allocate them to whatever wallet you want. The global allocation plan does not allow this. You have to follow the plan that you agree to. So I guess the pros to the specific are you can choose however you want to, allocate the units of cost basis. The cons are you got to do this before the end of the year. The pros to the global allocation plan is this can be figured out after the facts, sort of after the new year. But you're stuck to a certain plan. So that's all about those two different allocation plans. Given that Puerto Rican residents, Act 60, are exempt from capital gains, what is the import of the new tax FIFO reporting and safe harbor? Great question. So I think this is still very necessary to follow the safe harbor and to follow the new IRS regulations. If they were to audit you, they're still going to be looking that you followed their regulations and the safe harbor procedures. If you ever go back to the U.S. and you give up your Act 60 status, then the method that you should be using, for tokens that you purchase while in Puerto Rico, will be the new IRS regulations, this FIFO by account. And to transition to that, you need the safe. If I'm unavailable to take a screenshot on 12/31, is it fine to do it earlier? Then make sure I don't do any transactions before the end of the year. So as I said earlier, best practice, December 31st, 2024. You're not going to get it wrong if you do it that date. If you do it before and you have transactions after, you're going to mess up the allocation, and you might disqualify yourself from that safe harbor. So, if you do it December 30th, make sure there's no transactions on December 31st. But again, best practice, December 31st is the date to do that. Is this retroactive? Can we possibly get a refund with this new regulation? No, this is not retroactive on your prior years. This is a way to transition to the new IRS regulations without punishment for using a non-prescribed IRS method in the past. So no, this is just a protection. The IRS offers these safe harbors for taxpayers to get into compliance. If Trump goes with no taxes for crypto at some point, can we defer our crypto taxes until that goes through? For this, I wouldn't bank on crypto taxes. There'd be no crypto taxes in the future. I will say, and I wouldn't, expect that. So, you take the most conservative approach. I would pay your taxes, not defer, pay when you owe them, and then you'll be fine. What if I cannot access old exchanges or wallets? For example, they shut down or shut off to U.S. citizens, or just migrated to some new service, or lost passwords. So unfortunately, I've seen this. It's all too common. What you have to do is try the best that you can. You don't need to take an inventory snapshots on these old exchanges or wallets. If there's no balance there, you're fine. You don't need to take an inventory snapshot. Just take the inventory snapshots of the wallets and exchanges where you currently hold cryptocurrencies. As far as doing a prior year gain calculation and reconciling past year transactions, you have to do the best that you can. Whether that's trying to remember when you purchase certain cryptocurrencies to come up with a estimated cost basis, or you can work with a firm like us to work through that situation. I've dealt with this multiple times. It's not uncommon. Unfortunately, I wish it wasn't, but that's how it is with crypto. All right. I had a loss and sold Luna back in 2021. Didn't report that tax year. Can I report that loss on my taxes this year? And will it offset any gains from selling crypto this year? If you had a loss in 2021, you should report it in 2021. You can go back, amend that tax year. You'll have to amend 2022 and 2023. And that capital loss carryover, if you have one, will be carried into the future. So you have to report the loss in the year that it occurs. What if I transfer all assets to one wallet? Then universal base becomes the same as account base, correct? It would still be a count, but all your assets are in one wallet. It'll make, if you did that before the end of the year, it would make taking the screenshot very simple. It would also make doing the actual allocation very easy. If that's something that you want to do, by all means do it. But this is not something that you have to do. If you want to keep assets in different accounts for security reasons or whatever other personal reasons, do that. Just follow the safe harbor requirements of the screenshot and doing the global allocation plan, and you're fine. If someone never left an exchange, do they need the safe harbor? So it, if you've never left the exchange and you still have assets on there, then yes, you need to do the safe harbor, take a snapshot of that account, and sign the global allocation plan. I submitted the safe harbor for myself, but I have not received anything from my business. Are you guys going to be sending one? Yes, we can do that. Do we have to separately track new 2025 transactions from these safe harbored ones? Are we forced to exhaust the safe harbor transactions before we can use the cost basis for newly purchased coins from 2025, assuming the same type of crypto? Am I forced to claim staking rewards to the same wallet that I deposited the staked income? Screenshots of tokens and pooled staking wallets and designate our cost basis to that address. Finally, what software do you recommend? All right, so there's a lot to pack in this one. This is a great question. So once you've done your allocation for 2025 and you start reconciling transactions January 2025 moving forward, the uh, default approach is FIFO. You are allowed to use specific ID, but it's very complicated. You have to have a full for just a quick note on specific ID. That means that you can choose, which is short for specific identification. You can choose the cost basis or unit of cost basis that you want to dispose. Um, you have to have all your books and records up to date before you transfer the asset or sell it. You have to mark which unit of cost basis you're going to sell before you do it. And you have to put that in your books and records. If you're on a broker, you have to tell the broker which unit of cost basis you're selling. So for a lot of people, they will default to FIFO. So for this question here, when you're buying new tokens in 2025 and they have this high cost basis because you've been buying since 2022 and everything is low, um, you can strategize a bit and think about this per wallet or by account method of accounting. You can have different wallets for different levels of cost basis. So if I have Ethereum, and I bought a bunch of Ethereum back in 2015, and it's really low cost basis. I can say, okay, all of these Ethereum go to wallet A. That's my low cost basis wallet. And then, the Ethereum that I started purchasing now, I could send it to wallet B. And so with this FIFO by account, if I have two wallets for different for the same token but different cost basis levels, I can decide, do I want to get sell my tokens with a low cost basis, but for a long term capital gains rate, or do I want to sell my tokens with a high cost basis to have the lowest amount of gains possible? So with this FIFO approach, you're always going to be taking the first token that you purchase within the account that you have. So if you have multiple accounts and and understand the cost basis of those Ethereum accounts, you can strategize. If you're interested in that type of strategy, come talk to our teams and we can help out with that. With the next, am I forced to claim staking rewards to the same wallet that I deposited the stake tokens? So if you receive the staking rewards in those wallets, yes, those rewards are going to be earned to that wallet, and that's how you will track it. So, and then finally, the software that we recommend to use to take a timestamp. Well, I'm not recommending a software. I'm saying you go directly into your phone and take the screenshot there or your account and take a screenshot of your portfolio with a timestamp in the bottom. A lot of these, when you take a screenshot or on your phone or computer, they have metadata that shows the date and time. Having a timestamp in there is best practice. If you're really struggling, just take notes and say save your files correctly, and make sure that that was taken on the correct date. How do I maneuver crypto that is gifted to me? Great question. So when you gift crypto, there's two sides: the gifter and the giftee. As you're the one who received the gift, so the giftee, what you need to do is talk to the person who gifted that to you and get the cost basis and purchase date for those crypto assets. When you gift crypto assets to another person, the cost basis transfers, the purchase date is the same, and so they will have all the same cost basis and purchase date. When you are the giftor, if you're gifting over a certain amount, I think for 2024 it's $17,000 or $18,000. You may have to file a gift tax return. If you're single, definitely. If you're married, file jointly. That goes up to $34,000. When you report a gift, there's that annual exclusion that I said of $17,000. After that, you report, and the remaining excess over $17,000 eats into your lifetime gift exclusion. Once you've eaten up your lifetime gift exclusion, then you'll have to start paying gift tax. Fortunately, that is for married people, that's about $24 million, and for a single person, about $12 million. So if you're like me, you got a lot of room for that. What if you have been doing FIFO all along? Great question. Well, if you're using FIFO and the universal method, then you still got to do this this safe harbor, sign the global allocation plan or agree to one, and take the inventory, because the universal is not an accepted method. You have to be using FIFO by account. Even then, why not cover all your bases, agree to a global allocation plan, and take the inventory. There's no downsides to doing that. Because what happens if you did something wrong in the past? What if I cannot log into an exchange because they banned U.S. citizens? So I mentioned this earlier. You don't have to, if you have no cryptos there, you don't have to take an inventory snapshot. Don't worry about it. Is the Windows clock on your desktop sufficient to count as a timestamp for the screenshot? Yes, that's fine. We just need to make sure that there's a date and time on there. So who does what? The exchanges send the 1099 DA to the IRS, and the allocation of unused basis is done by a CPA and not the individual, right? So the great question. The 1099 DA is going to be required to be reported by brokers for tax year 2025 in 2026. So this is after this allocation takes place. Now for tax year 2025, in year 2026, the 1099 DA will not have the cost basis of your assets. It will just have the amount of each asset sold, the date they were sold, and the proceeds. Nothing else. So this allocation you still need to do. Then for year 2026 in 2027, these brokers are going to be required to report on the 1099 DA. In addition, the cost basis. So it's going to be a bit interesting how that's going to play out, because if you're using a lot of different exchanges or wallets, how do these brokers know what the cost basis is? It sounds to me like the user is going to have to input the cost basis. I can see a lot of challenges with that. So when it comes to the allocation of unused basis, this can be done by a CPA, or it can be done by the individual. If you feel confident in doing it, feel free. But this allocation is going to be complicated. I would recommend talking to a professional who knows how to do it there. How do you show dates purchased and cost on the snapshot? So for the snapshot, you don't need to show the cost basis or the dates purchased. You only need to show what is sitting in your account. This is like for a business, they're doing the inventory count at the end of the year to make sure that their books match the what they actually have. So you're just going to your portfolio view and you're saying, okay, I have a half a Bitcoin, 5 ETH, 10,000 XRP. Take a snapshot of that. Is the global allocation plan just me averaging the cost of all Bitcoin in a wallet and giving it all the same average cost basis for tax purposes? No, you're taking the same. It is not an average of cost basis. It's taking your actual cost basis that you reconciled, um, and then you are going to allocate that to your actual inventory. So if, let's say, I have one Bitcoin on Coinbase and one Bitcoin on Binance, and the simple example here, I bought one Bitcoin in 2020 for $10 and one Bitcoin in 2022 for uh, $20. I'm allocating those specific units to Coinbase and Binance. What if you do nothing? I think it's so easy to just agree to a global allocation plan and take the snapshots. If you do nothing, you're putting yourself at risk for paying more taxes. And if that's what you want to do, feel free.
Can I comment on this? All right. So if you do nothing, then you get none of the benefits of the revenue procedure. So when the IRS goes back and selects a tax return for an audit, and typically they audit 2 or 3 years at a time, they're going to do the gain calculation using a FIFO by account method, which is probably like 99% of the time not the method you used. Okay, so you're going to come up when you said, "Oh, I have so much capital gains," and they're going to come up and say, "No, no, no. The right capital gains is a much larger number because they're using the oldest cost bases." So then they're going to say you underreported and you owe this much additional tax plus penalties and interest. You're going to come back and say, "Hey, wait, no, I did the gain calculation. I did a good job." And they're going to say, "No, you did not take advantage of the revenue procedure to protect yourself. Therefore, we're going to retroactively apply these FIFO per account rules against you." There is no upside to doing nothing. There's nothing possibly good that be done to do nothing. I think everyone should sign up for a Safe Harbor Allocation Plan. Even if you don't use it, at least you have one date and time stamp before the end of the year, which is the deadline. So please do that. You go to our website. I don't know if it's been on the screen, but CryptoTaxAudit.com/1099, and we will have a lot more detail that we talked about on this call, and a lot more of the granularity in what the IRS is talking about. And if you have any questions, please send them to us. I hope we're coming to the end of this AMA, and it's been really rewarding. Ben's done a fantastic job answering these questions. Again, you don't have to do all the Safe Harbor allocation activity at this time. The only 2 steps you need to do is sign up for the plan. Remember, that's confidential. The IRS does not get a copy of that. It's just you have a copy, we have a copy. It's an electronically signed document. And the second thing you need to do is do the inventory on December 31st or whatever your last day of trading is for the year. But it has to be done this year. Don't do it January 1st. Do it this year. And when you make sure there's a timestamp on it, if you're saving it to your phone, make sure you route it somewhere and save it, preferably in a printed format, and save that with your other tax documents. There are additional steps to the revenue procedure, which we will explain. Once you sign up, you get on our mailing list. Go to our website. We're doing this for free. There's no charge. Sign up for the plan, do the inventory, and we will send you more information about how to get your taxes done. We're doing this as a public service, and trust me, you will feel much better knowing that you've done this. If you have any additional questions, I don't think we're planning another AMA unless we get some more requests. These are available on our website. This video also will be making it available on X. And if you need a private consultation, go to our website and schedule a private consultation. I wish you the very best of luck. I hope crypto keeps going to the moon, and wish you a very happy new year.